All right, Senor Ortiz, you are
Hey,
live. We
hey,
ready to get this
hey,
thing going, brother?
man, let's do this.
Let's do it. What do KTTV? Mr. KT and my co-host.
JoJo, baby.
Welcome back to the Administrators Podcast, where we break down the markets in a way that actually makes sense. And so tonight, Jose, we're not talking about random movement. We're talking about pressure, brother. We got pressure
Woo.
from the war, pressure from oil, pressure from uncertainty. Because right now, the market isn't confused; it's reaction. So tonight, we're going to break down what's happening, why it matters, and how you move as a trader in this type of environment. And so I guess, Jose, we're going to move to this market post, man. So what you got for us tonight?
All right, man. So let's do this. So, hey, everybody. So, welcome back to another edition. So, tonight we are going to be looking at our market pulse. And right now we are looking at the S&P heat map. And if you see, we have a lot of green, KT. So, a
Hey,
lot,
you
a
know
lot of
I'm
green
about
out
that
there.
green, man.
Oh yeah, and so the thing is, though, is that as we were moving through the week, and then the past couple of weeks, we saw a lot of red out there. And if you
Mhm.
notice today, we've got our defensive stocks, and then we got our energies a little bit down, and our utilities. But the main thing is that the tech is green today.
Yeah.
Microsoft up 3.64%. You
Yes,
know, you can see that
sir.
Oracle. Palantir was up today, and we're going to take a look at Palantir later. Little, sneak peek. But look at
Hey,
those stocks,
I love
man, in
Jose.
the financials.
I love Jose. I just
Woo!
want to say my epic fail of the week today.
Go ahead.
Last week, I bought a call on Palantir.
Oh,
Rolled that thing up to about 133 today. After 133, it lagged. I seen the market dropping, so I said, "Well, I made some nice profit." And after that, that thing went on back up, man. So yeah, when you say Palantir, man, golly, boy, you about to crush me, man. But go on, I digress.
man, no, that's good because it's going to take us into that, later on. But man, if you see this green on here, like I said, Microsoft, you've got all these different CrowdStrike. You got your semiconductors were a little bit green today. NVIDIA was only up 0.36%. But for the majority, we did see a lot of green in a lot of places, especially in tech and financials. And as KT alluded to earlier, there's a lot of pressure out there. But the biggest reason that we saw this little movement today, let me show you this fear and greed, because our fear and greed is now creeping up to the neutral, because remember, we were way back here. We were in the very, very, very fearful stage. People were very, very fearful. People were talking about selling everything. And we have crept up slowly. So we are sitting at a 41 right now. Fear. We are trying to get back to that neutral because we've been trying to see what we could get into, because that extreme fear a week ago was no joke, right? And so now we are and I say creeping because we're not out of the woods yet. We are still there. We are still very much trying to figure out how we're going to navigate through this war, because at any moment, Trumpster, that's right, Trumpster can say one thing, good or bad, and the market will shoot up or shoot down. And so apparently, right now, we are in some talks. They are trying to negotiate because the deal was not reached over the weekend. But apparently, Trump's saying that he's trying to get them to make a deal. So right now, we are currently sitting at a 41. We are up from last week when we were extreme fear. And so for the past, yesterday was also fear. And if you can see here, a week ago, extreme fear, and a month ago, extreme fear. So we are creeping our way back up into a neutral position. Hopefully, we can get there this week, and I'll show you some overextended stocks too in a minute. because we had gone from that extreme fear to now fear, and we're hopefully going to get to where we can sell some of these items that have popped off in the past week or two. All right, KT.
All right, man, we are back, brother. All right, so uh, as we jump in, man, I think we'll get into a little bit of all right, Senor Ortiz, man. Thank you for that information. I guess, man, we're jumping right into our news today. And so we are talking about some of our macro headlines. And a lot of this is based on the war, based on what we're seeing out here. So let's talk about what's really driving this market, because it isn't earnings. This isn't just data. This is geopolitics. So right now, global markets are reacting to escalating conflict in the Middle East. We got military tension involving Iran, the U.S., and Israel. And more importantly, as you know, if you have not been living under a rock, the threats around the Strait of Hormuz. And so that matters because roughly 20% of the world's oil supply flows through that region. So when that's threatened, what happens? Oil spikes immediately. And when oil spikes, everything changes because oil affects our transportation, it affects our manufacturing and our consumer prices. So higher oil equals higher costs. And what does that lead to? Inflation pressure. And if inflation rises, the Federal Reserve has a problem because now rate cuts get delayed, and delayed rate cuts, that's not bullish for growth. And we all know that. So what do we see? A risk-off environment. And so that means money moves into the dollar, money moves into gold, money moves into our defensive positions and away from tech, high growth name, and risk trade. Now, as we see Jose saying that things, because Trump is talking, and you know, the piece of that is he is a market person, right? And so when the markets are in trouble, he may just say anything that'll pump those markets. But once that thing that he said is not panned out, what happens? We will go back down and tank. So as we look at this, we're not panicking because we understand that nobody is panicking. This is repricing. So the markets are adjusting to that uncertainty. And when the uncertainty rises, the volatility rises. But the only thing about that is, if you were looking at us for all these weeks and the fear and greed was over to the left side, it was fear, that's when the opportunity shows up. But as we say each week, only if you stay disciplined. So basically, Jose, that is what's been going on with our markets, with our macro news, and everything, man. So what I want to do is I want to go into some platform probing, and I want us to take a look at. Hold on, let me see if I can share this. I want to steal because I've been waiting on this synopsis. Y'all know I've been paying this synopsis about 30 times this week. Because I'm telling you, I am not gonna miss it. I did miss our $25 move today because can you see that?
Yeah.
Yeah. So if you look, where did we start our day? We started our day right here at 390. Where did we end our day? At 419. And so if you look at synopsis, we did a $25 run today. I did miss that run. Did not have nothing. I even sold my shares for a few profit. And then I was like, okay, I'll just get back in. So now what I'm doing is, and you can see this in real time, I'm going to bring that alert down to 424. So I'll make a decision when we get up to our yellow, so which is our 200 on our 4-hour chart. So now this is what I want to kind of show you guys. I want us to look at this full chart of what's been going on with synopsis. All right, let's look. On the left, what do we see? Price start holding structure, and then we got a sharp rejection, followed by aggressive selling. So once you see, we got our sharp rejection, and the next thing you know, we headed down, and here we go to 300, and I'll bring my line up right here. Here we go to 378. That's not retail selling, that's institutional pressure, because we know we're not going to move a stock like this to where it drops. But what confirms? We had lower highs. Moving averages start rolling over. So if you see our orange line is our 60. So what happened? Our So if we can look over here, let me go back over here. And we look, we see our blue line and our green line above that 60. But what happened when it started crashing? All our lines started going under. Moving average started rolling over, and then we had a clean break of our support. So that was the trend to shift to bearish control. But what happened? Volatility and liquidity sweeps. And so please remember that we are on the 4-hour time chart. So if you look at all these candles, they are 4 hours at a time. So we had some green, then we'll dip, we'll pick up money at their resistance, and then we'll go right back up. And so when you look at that chart, we had a few large green spikes, we had some immediate reversals, and we had some long wicks on both directions. This is not a trend, that is liquidity being taken. And when we say liquidity, we come to see what's happening with your money. The money goes, and so that's the market doing two things: stopping our week and then trapping our breakout traders, which is why I missed that run because I didn't want to be too early for the party, and then this happened to me, right? So now we got high volatility, low direction. If you look at our middle, if you're chasing candles, you're getting punished, period. Because right now that thing will jump up, jump down, which is why I was not. But if you start to look in the middle and you start to look around 390, that is our base formation. Our price started to slow down, candles start getting tighter, range starts to compress, and the movement becomes more controlled. So that's our base formula. And please remember that a base is not bullish, a base is our stabilization. So I should have been paying more attention because understanding, look how many times we bounced on 390. If this was a shorter chart and I was going for a day trade, I would buy right here, right? But once again, you can't really swing a lot because this Trump market is unpredictable, especially for our semiconductors. But when we look at this line, what does that tell us? The market is deciding what to do next. So from 390, we can either go back down and end up at 378, or we can jump up like we did and head to 419. So what happened today? We got a strong green expansion. We got a big reclaim of a lot of our short levels, and we got price pushing above our moving averages. So if you look, this thing went above our 9, it went above our 20, it went above our 60. Basically, it got the hell on where it had to go. That's not the man. I mean, that's not random. That is the man stepping in. So, as we said, we got a strong, we got a strong support at 390 on the 402 zone. Once we got that strong support, we had a little mid resistance around here, like 412. So if you see, we had a bunch of candles around here, 412 to 14. But our current breakout zone is 418 to 420. And if you see, we are headed to our 200 moving day average on our 4-hour chart, which is 422 to 426. So if you are waiting on this and you just really want to be G about it, you got to rate to this 434 level for us to really reclaim and start moving back on our bullish trend. So the key message for the night is this is a bounce inside a larger structure. It's not a confirmed full reversal yet because the higher time frame trend is still questioning, but the price is pushing into resistance. So that's why I put my alert here, because when it gets here, I have a decision to make. Either we're gonna let it go here and we're gonna close on top, or we're gonna catch that rejection, which means we could be heading back down to our 390 area because we've been moving about $20, $25 a day. So this is our two scenarios. I'm gonna break down a bullish scenario for you, and I'll break down a bearish scenario. Like if the price breaks and holds above 422 to 426, pulls back and forms a lower high, then pushes again, that's our continuation. Go get your money, man. But if that price rejects around this 418 to 422 zone, and you start seeing some upper wicks, and it falls back below our 412, that was just a bounce, and we headed back down to our 390s, right, inside our larger downtrend. And so as we get ready to close this thing, I just want to teach you something real. Every strong move is not a new trend, which is why I waited today before I just jumped in, right? Sometimes it's just a reaction, and what we do, we know that our president does a lot to get reactions out of our market. So if you don't understand the difference, you'll buy at the top of the bounce and then sell the bottom of the move. Don't be that guy. Please remember that this is not about predicting. This is about positioning. Because in markets like this, the traders who wait for confirmation are the ones who stay profitable. Period. And so that's where I'm at on this one here, Jose.
Man, that was some good stuff, KT, because I'm looking at this chart and I'm like, wow. So all
Yep.
the lines that everybody's, thinking about when you start charting, your supports, your resistances, looking at your candles, man, this is good stuff to know. Your intraday and even your weekly charts and formations to where you can get in and get out.
Yes, sir. Yes,
Right.
sir. That's it, brother. That's it.
All right. So I know that we've been talking about some stocks, and I want to revisit just a couple real quick. But we were not showing a lot of love to Microsoft, and so this is the year chart on Microsoft, and we mentioned it a couple of times. And I want y'all to notice that is a downtrend to the fullest when we started here in 2026. And it just kept going and going and going and going. And so, we hit our double bottom right around 357, 356. But we've been talking about this, and then we actually mentioned it when the RSI was below 30, in the 20s. And now we're not there yet, y'all, but we are starting to have a little bit of a uptick. We're going to have to keep an eye on this to see if the trend does break. And so if you look at the 7-day, the weekday, the week chart, you can see that we are indeed trying to get up out of this, so we're trying to make some moves here with Microsoft. And so today, Microsoft was up quite a bit today. And so we are looking to see if we can get that. I caution you right now because RSI for today did take us over 70. And so if you are looking to get in, I would wait a little bit because our 7-day RSI is also over 70. And we are approaching what it appears to be a double top. And so we want to be careful right now with Microsoft, but definitely things were looking positive for us. If we can see the 1-month chart now, see almost a perfect double top there. And so if we can break through that, we might have a clean shot to break through a little bit more to 385, but eventually over to our 400, which would be good. I went long, KT. I did a leap for January 27. And if we do not make it past this double top right here, I'll be looking to add a 2028 call. And so right now, I did take out 2027. I got some January calls for Microsoft. Let's take a look at Google real quick because Google was definitely one that I mentioned.
Hold on. Here you go. You said you bought some 2027 Microsoft calls.
That's right. For January 2027. I bought
What
the
is
dip.
your can you tell us the strike price for that?
The strike price right now, because we were almost 2 months ago, we hit 560. So my strike price is 600. My entry was 110.
Yes, sir. Thank you so much.
And so now that Microsoft is churning, and KT, I added when I got in. So I'm looking at maybe 5 or 6 of them right now. And so if we do decline some more on Microsoft, I am looking at 2028 because I really think Microsoft is the real deal. The other real deal that we talked about, I know we talked about Google. I know we talked about it. I know we mentioned how Google was getting hammered. Um, and guys, a week ago, Google was under 3. A week ago, maybe a week and a half. Today, woo, 319 today, y'all. And so when we were talking about Google, I went long again, KT. I went long with some January 27 calls. But I also was looking at trying to recoup some on my June calls. And so now my June calls are relatively speaking back to where they were. And so tomorrow I am looking to close those positions because we are sitting at over a 70 RSI, which is, a little bit of overbought. And so, but I wanted to let everybody know that when we mentioned Google, we mentioned it. And, it has definitely crept up because I know we hit that bottom right there at the 275-ish area. And I know we were talking about getting into some. But the last one I want to talk about, because we're trying to decide which way it's going to go. And we are looking at Palantir, ladies and gentlemen. Palantir. This is the year chart on Palantir. But if you look at this, our RSI is roughly in the 40s. We've come back a little bit from the 30s. We had a double bottom right here at 130 that we are trying to get away from. It's like expand on in. It's been choppy. If we don't break this line tomorrow of 130, KT, I'm going to go 2028 on this one as well. And so right now I'm sitting at some $300 calls for January of 2027, simply because we were in the 220s at one point. And so I think that we can definitely get back. But this was not that long ago, KT. So you're talking about end of last year, December, that we wrote it up there. And now we're getting hammered. And so definitely looking at Palantir. Now, one of the things that I can look at too, we did have right up in here, we had a little bit of a cup and handle form, but the handle didn't completely form. And so that's why we had a little bit of more of a downturn. So I am definitely looking at Palantir. Like I said, I did day trade it last week, made a couple hundred, but as of long term, if we don't make it past if we don't stay above this 130, I'm definitely looking at some 2028 calls for Palantir. So Palantir, Google, Microsoft, those are the ones. I think that Microsoft still has a long way to go as far as breaking out from that downtrend. I wouldn't be surprised to see it, down a little bit more maybe this week at some point, just because it is trying to reverse. And so if it does, I'm going to snag me some 2028 calls. Google, definitely with my June calls, looking forward to selling those and then riding it out because I do have January calls as well for that. But definitely Palantir, looking to see which direction it goes because a lot of negativity out there talking about Palantir. But guess what? Good old Donald J. Trump tweeted about Palantir last week. And so everybody's on watch for that. So there we go.
All right, man. Well, before we close this thing out, I just wanted to say there's been a lot of hype, a lot of people asking me about SpaceX. And so I just want to cover how to buy SpaceX. And so when I was looking today, I looked inside of the ARK, ARKKV. And so that is the ARK Venture Fund. And so their highest holding is SpaceX. And I want to say that is around $47 right now, $46. And so I just want people to understand. Matter of fact, let me see if I can pull it up for us real quick before we get out of here, man. I ain't mean to go off script, but A lot of people been asking me about this, man. So I just wanted to see, man, what is that art venture form, man? Do you know that?
ARK?
Yeah, but it's the venture.
Oh,
It's the venture form. Well, nevertheless, I can't get into it right now. Yeah, I can't get into it right now, but I just want to say that is maybe something that we look at the next episode on how do people take advantage of that, because Kathy Woods has really been doing a lot of investing. If y'all know anything about Kathy, y'all know that she is all, and I'm excuse my French, balls to the wall on SpaceX or anything Tesla, Elon Musk. So yeah, right now, just look at getting that exposure. Art Venture Fund is one. The Private Share Fund, ticker QRIVX is another one. And Barron First Principles ETF ROND is the third one. These all give you exposure. And then we got a few that are very sneaky plays, proxies. So Echo Star has a take in SpaceX, and some semiconductor AI companies benefit from space and data growth. So start looking into those, and then next time we will be back and try to give you a little bit of that. But for tonight, we're ready to bring this thing to an end, Jose. And so as I get ready to close this thing out, I would just say we are in a market driven by headlines or an uncertainty. That means, as we say, this is not a guessing market. This is a disciplined market. Please wait for confirmation. Respect your levels and align with the momentum. The worst thing you can do is be an against the trend trade. Align with the momentum. If you see that thing going up, then you wait. It'll do a little small pullback, and then it will steady on its way back up. If you see it going down, it's going to do a little small bounce, but then it is headed back down. So make sure that you're on the right side of the trade. And if you got some value from this, tap in with us. Like, subscribe, and share with other people who are trying to level up financially. I know a lot of my educated friends are, so we're trying to plug them in. Next episode, we diving deeper to these earnings. We're going to try to figure out how to get us some SpaceX. And I think that's it, Jose. Anything else before we close this thing out?
Y'all, just be careful out there, man. Just, do your research. Stay hungry, but don't go out there and start trading just to trade.
No, please don't blow the bag like that. All right, y'all. This is KTTV, and my co-host.
All right, JoJo, y'all.
Hey, we'll see y'all next week.